Hi there, traders. Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to bring you the latest in FX markets as well as some key opportunities to look out for. So stick around. Today we're going to be breaking down a couple of markets that I'm looking at on a strength and weakness point of view. Going to be looking as well back to dollar yen as price seems to be rising. And I'm also going to show you how you can use trend lines effectively in your trading. So let's kick it off and let's get straight into it. We're looking at strong versus weak currencies to start a week off. And this is where I always like to kind of start my trading week, is by trying to identify what currencies are strong, what currencies are weak, or why are they doing that, and if there's any kind of opportunities surrounding it. So got my currency strength meter here. We can see that it's showing that the pound is one of the strongest currencies and the Australian dollar is one of the weakest. So immediately I can come down to my trade signal area here and see that pound Aussie is a potential to go long. Okay. Now I also kind of added a little bit of a caveat here that you can look for a reversal, but I want to stick with the main trend signal, to be honest. So looking at potentially long pound Aussie this week, and I'm looking for pound to continue that kind of strength. We also have some other information that we can kind of bring to the table, which suggests that the pound could get stronger as well. So let's break that down a little bit. So let's go take a look at pound Aussie first, and then we'll take a look at what is going on in terms of the rest of the information that we can kind of see happening. So one of the things that obviously I like to use is the currency strength meter combined with other things. So like the commitment of trader reports, for instance. Now, I also like to add in a couple of other things as well. So I'm just going to bring up the interest rate tracker as well, because this thing is what really drives markets, right? This is the one thing that we really need to keep an eye on, is interest rates globally. And we can see that in the UK at the moment, it's leaning a little bit more hawkish right now. Okay, so it's got hawkish 74%. So that means there is a 74% probability that, you know, the vote essentially is hawkish, right? If we have a little look at the sort of plans from the next hike, or the probabilities of another hike, it's only at 6.4%, but the tone from the central bank, which is super important, is hawkish. So I like the idea of buying pound because of that. We've obviously got the strength meter, which is saying pound is a strong currency. So that adds to weight to it. And then if we go take a look at the commitment of trader reports here, we can see the pound sterling has a 100% sort of signal across a 36-month index, 18-month index, and 6-month index on the markets made clear scale. Now, what does that basically mean? It means that commercial sort of contracts, net contracts that is, are at their highest level in 36 months. If I just zoom back a little bit here as to what we are looking at, the last time we were kind of in a very similar zone was back here, obviously in 2019, which we've also discussed in other videos previously. But you can see what happens in 2019. We have a similar scenario where long contracts reach a significant high, and look what happens to price. It kind of bottoms around about that 1.2 handle, rallies all the way up into around about the 1.35 before kind of turning over. Are we going to see something similar this time? And this is why I'm keeping my eye on pound, because on the weekly chart, we're kind of at this bottom of the range and we have this potential signal. Now, on the opposite side of that, because commercials are hedgers, we have hedge funds. Now, hedge funds are net short, and they are net short at levels, again, we haven't seen for a long time, since 2019, in fact. So again, we've got the combination of what's happening back in 2019 as potential sort of insight into what could happen going forward. And we have this weekly chart showing that we are at this weekly level of support. So I really like the idea of potentially buying the pound. Now, obviously, when I go in to buy it, I have to ask myself the question, what am I going to buy it against? Now, I could go to pound dollar and try and trade pound versus the US dollar, but the dollar is also a strong currency at the minute. So would it make sense to go and trade pound against the US dollar right now? Probably not. It means that that market is more likely to range. And as we can see, it's already in a weekly range, but it means that maybe the day to day this week could range. However, if we look at the Australian dollar, that is -5 on the scale. If we look at the New Zealand dollar, that's -5 on the scale. If we look at the Canadian dollar, that is -3 on the scale. So anything kind of below -3 and lower, that's a weak currency. So immediately when I look at my table and signals here, trade signals are suggesting that if I want to trade the trend on some markets, I want to be looking at a pound Aussie long, pound Kiwi long, pound CAD long. So that's the markets I'm going to be focused on going into this trading week. Now, what I like to do as well is create a little bit of a momentum meter, right? So what this is here is it's looking at the currency strength and weakness. But just zoom in a little bit. It's looking at the currency strength and weakness, and then I'm mapping out the momentum of that. And I do that by doing a few things. So first thing, if we go down to pound Aussie, I have a buy signal on this. I'm looking at the weekly close. So how did last week close? Did it close in line with my expectations? Is it a bullish close, bearish close, whatever? Is price trading above the 50 daily moving average? Okay, if it is, I see that as bullish. If it's below, bearish. Then I look at what's known as momentum, plus or minus. And that is derived from the 50-day moving average. So is price closing back towards that 50-day moving average, or is it closing away from the 50-day moving average? So let's say on Friday, pound Aussie closed bullish above the 50-day moving average. That means that momentum is going away from that average. So it's bullish. If it was closing towards the 50 moving average, it's bearish. Okay. I then look at the. Sorry. Right, let's start with the England game. I then look at the stochastic oscillator. And the stochastic oscillator is something that I look at in terms of momentum. And I look at it on the daily chart. Obviously, if it's moving higher, then it's bullish. If it's moving low and pointing down, it's bearish. I then look at the daily trend and phase, and that's where the phase 1, phase 2 comes in. So is the daily trend up? Is it making higher highs, higher lows? Okay. Is it down? Is it making lower highs, lower lows? What's the daily phase? Are we in phase 1, which is with the trend, or is it phase 2 against the trend? And I combine all these things together in order for me to create an option there. 1 second, guys. I'll be back in 2 seconds. Apologies for that. Someone was at the door. So yeah, I mean, like to look for momentum. I like to look for opportunities based off of that. So you can see when I go down to pound Aussie here, we've had a bullish weekly close. We've had a close above the 50 daily moving average. The momentum is bearish because the last daily close, which was Friday, closed towards the moving average. With stochastic is bullish because it's above 70. And then we have the daily trend, which is bullish because it's making higher highs and higher lows. And we have the daily phase, which is bearish because it's in the phase 2. It's moving against the trend. Okay. So let's go take a look at that. I want to have a little look at pound Aussie because I think this is a good potential opportunity for us. So when I come down to this, I like to look at what is the trend doing and just use really simple methods to identify where we could potentially get long. So first of all, I want to identify, are we in a trend? Yes, we are. Okay. Let me just remove some of these drawings here. We can see prices making higher highs, higher lows. And pound Aussie has been on our radar for a little while. Okay. But I want to trade pound Aussie at these areas here. Okay. Potentially on the phase one as well if we get some short-term moves. But I don't want to trade it in the phase two. The phase two is my kind of alert system. It means that the market is in a trend, but it is creating a potential opportunity because price is either, moving away from the direction that you want to trade. So basically it means that you're going to get in a better price, or, it's on the opposite side of things. It could be moving up towards an area of resistance, for example. In pound Aussie's example here, we've come up into resistance now at the 1.93 handle, and we've rejected it. The market formed this really nice daily sort of wick to the upside, a hammer candle, if you will. And then the next day on Friday, price closed bearish, and Monday we're kind of continuing that momentum at the moment. So if I want to get long, where do I want to get long? That's the question I ultimately want to ask myself. And I always kind of first point of contact would be previous area highs, which have been used as resistance. So obviously sellers took over here, pushed price to the downside. That area there could be a point of interest. Obviously, you could see sellers tried to get back in, but failed. Buyers won, and then the market took off. So really, I want to see price come back down towards this 1.91 handle. If price can get back to there, that's when I'm going to start getting interested in price. Now, you can look at some other things as well. I am just going to set an alert around about that 1.91 handle. But you can look at some other things as well. Of course, you could look at things like the Fibonacci retracement tool. Okay, and you could look at where price could come in that sense. So you got the 61.8 here, which was that 1.91 sort of 50 handle. You got the 50%, which is 1.9080, and you got 38.2, which is kind of hovering around 1.9. You've got that available to you. You could also look at volume profile. So if we look at the extended move up, where is the most traded level within that area? So you can see that's around about that 1.91 as well. So we're building up a bit of a confluence that around this previous high could be a good area to start looking for price to turn back from being in that sort of phase two, potentially back into phase one. And who knows, maybe the 50 daily moving average will catch up at that point as well. So alert has been set around about that 1.91 handle. I want to see price come into that before I look to get long, because let's think about it like this. Let's say currency strength for me, it tells me to be bullish, tells me to be long. I get long now. Where do I have to target? I have to target at 193, which is currently only 57 pips away. Where's my stop loss got to be safe? Well, it's either got to be below this 191 handle, below the daily 50 moving average, or below the previous swing low, which is all the way down at 187.90. So we have a negative reward to risk ratio in that sense. So I always want to say to myself, well, if 193 is my first point of sort of resistance I need to get out at, where can I maximize that risk reward ratio? So if I go down to the 191 handle, for instance, that's still only a 0.6R. So that's still negative. It starts to turn to sort of 1-to-1 when I get around about this 1.9040 handle. So now, obviously, we have to talk about sort of risk management and things like that. So if I was to get in and around that 1.91 handle, I might need a tighter stop. Okay, so I might have to bring my stop up, let's say, below the 50 moving average. Okay, that then increases my reward to risk, so it's positive. So I always try and think about that. Where does my stop loss need to be? Where is my ideal entry point? And how am I going to try and take advantage of any kind of move there? So all I'm going to be looking for now, I'm going to watch this 4-hour time frame. If the 4-hour time frame starts to show that price moves from being higher highs, higher lows to, let's say it forms like a head and shoulders, lower high, break to the downside, then it's moving against the overall trend. I'll wait for price to come into my level of support, and then I'll be watching the lows. So if I see that the H4 time frame is kind of making a false low, then I'll look to buy on that false low and look to try and trade back up into that level of resistance. So that's my plan for pound Aussie. We obviously had two more of those as well. We had pound Kiwi. Now, if we look at pound Kiwi, you know, we are in this kind of like, we'll look at the weekly chart in particular. You've got all the support here at 2.245, and you've got all the resistance of the top around about 2.35. Price is already there. Price is already there. So again, think about your return on the risk that you would take here. It's not good, you know, unless you were going down to like a 5-minute time frame trying to trade that, but the spreads would be a little bit wider at that point, so it's not feasible. When I look at price, I see that obviously we've been in that sort of range. So markets sell off from range highs, or can sell off from range highs, and you can buy from range lows. So there's a couple of different options. I either wait for price to come all the way back down here, back to range lows. Unlikely in this scenario. I can see that there is a lot of sort of highs going on here around about that 2.3 handle. Let me just confirm that. It's more like 2.31, I would say, in and around here. That handle there looks like it could be good for some opportunity. And again, if I just pop a volume profile on there, that is a weighted VWAP. Let me get the volume profile. Go from the swing high to the swing low to the swing high. Look at all that volume back here towards that 2.3 handle. So I want to see maybe price come back down there before I get involved. Again, I can set an alert. And then when the alert goes off, I just do the whole process again. I see, do we still have a pound that's bullish, a Kiwi that's bearish? Do we still have a macro driver for that? Do we still have trend intact at that point? And if I can answer all those questions successfully, then there could be a good trading opportunity for me on pound Kiwi. But I got to keep an eye on that one. But I don't think this one is setting up as well as pound Aussie. And then finally, if we take a look at pound CAD, lovely little bit of trend developing here. This market has been in a bullish trend since September of 2022. We've recently just broke out of some key highs as well. And you can see market is in a lovely phase one of the trend here. So again, I think for me, I'm just looking for the best place to maximize my reward to risk. So I'm looking around about that 1.88 handle. If I can get stops above, below sort of 187, then, you know, that gives me a positive reward to risk ratio, and I'll look to kind of trade that move up as well. So keep an eye on that one as well. I'm going to put an alert around about 1.88 on pound CAD to see if we can get an opportunity to buy this market in particular. So that's what I'm looking for on the pound side of things. Okay, so just to kind of go over what we're looking at a currency strength meter that is telling us that pound is the strongest currency at the moment. Aussie is the weakest, alongside the New Zealand dollar and the Canadian dollar. So I want to be buying pound against those. You can see on my trade signal table here, we've got pound Aussie, pound Kiwi, pound CAD, all looking to go long on those markets. If we look at the commitment of trader reports, we have a potential bullish pound signal. So there's a good idea of potentially buying pound, because we have hedge funds that are selling pound at an extreme. So they may get out of those positions, which could cause a reversal. Then we have as well a BOE who is hawkish. So their bias is hawkish. If we look at CAD, it's neutral, and they have been decreasing interest rates. Okay. So again, pound CAD seems to be the one really to have a little look at. RBNZ are looking to hike interest this week, so maybe we avoid the Kiwi at that point. So let's move on. Let's go and check out the big story. We're going to have a little look at what's been going on in Japan and dollar yen. Okay, so dollar yen is still, well, it's back grinding higher. Okay, so we had a almost what people were thinking was an intervention, but it wasn't an intervention. This was basically the Kospi stock market fall, which kind of put a little bit of a risk off element into the markets, which caused dollar yen to fall 160 pips from around about the 1.6250s down to the 160.70s. So decent drop there in dollar yen. Currently still short this market at the moment, looking for that intervention play still. But you can see how we came back into this key support here around about that 160 spot 50 handle. Market then started to sort of find support, break into trend still. So trend is still up, right? The short that I'm in is very counter trend. The market has been, breaking through intervention highs and continuing to make higher highs and higher lows. So really speaking, if I was following the trend here, I'd be looking to buy dollar yen. But I think there is a solid risk to doing that. I think there is a potential for interventions come into play. And if that is going to happen, then dollar yen could fall significantly. If I look at the weekly chart here, this was an intervention play back here, back in July of 2024. You can see real strong moves to the downside here. We saw price kind of find highs at that sort of 162 handle, fell all the way down into the 140 spot 50 over a period of just a few months. So I think it was 2 months. So, I'm looking for that similar sort of play again. I think that at the moment, obviously, everyone's not really focused too much on the intervention, or they focus in the fact that, dollar is a strong currency, yen is a weaker one. So they're buying the trend at the minute. I don't see the value in that right now. I see the value in potentially getting short. So I'm currently short. I've got risk in play. If I lose, so be it. And I'm looking to see if we can get a kind of intervention coming through. So the next part of the show I wanted to talk about was what's known as the skill of the day. So this is a part of the show where I like to upskill a trader's skill set. I like to show them something, a technique, a strategy, a reference to something in the market that they might not know. Or maybe they do know, but it adds a little bit of an extra element to it. And the one thing I'm going to talk about today is trend lines. Now, you might think, trend lines are rubbish. They don't work, X, Y, and Z. Now, that may be true, but I have done extensive back testing and forward testing, really, on trend line breaks within trends, and they are really good. Okay, they are very strong. They're very successful. Now, what I mean by that is, let's just move down here a second. Let's say you've got price that is trending down, right? So you've got the market making lower lows and lower highs. And let's say the orange line here is our sort of 4-hour trend. So within that, you'll have a trend within it, right? So on a sort of lower time frame, so let's say a 30-minute time frame, I'm just going to change the color of that to blue. You will have in the phase 1 of the H4 time frame, you'll have lower highs, lower lows in line with the main trend. On the phase 2, you'll have price going against trend. So what you'll see is on your lower time frame, you'll have higher highs and higher lows. And then the same when it transitions into the phase 2, phase 1. And like I said, that's where I like to trade. I like to trade in this pocket here, where there's a potential for the market to move from that phase 2 back into the phase 1 with the overall trend. Now, what you'll see is on this 30-minute chart, let's just say you've got a nice little upward trend. So what I like to do sometimes is look at a break in that trend. So let's say you mark up the lows of that little pullback and then price breaks out of it. Could be an early warning that we are going to start turning into that phase 2 into the phase 1. Let me show you some examples. So here we have dollar yen, right? Okay, and we can even look at the recent upward trend that we've had develop, or we can just have a little look at a bit of a cleaner trend that formed back here. So let's say we look at January 2025 down to April of 2025. You can clearly see there's a downward trend forming, right? You have the market that's making lower lows and lower highs. Okay, the point where it tries to break into new highs, fails, continues lower, pulls back, continues down. So if I go down, so this is a daily chart. So if I go down to an hourly chart, just kind of do a bit of like a two-step process there and just go back to that area that we were in and zoom in to a couple of examples. Let's look at this example here. You can see that in that phase 2 on the daily chart, you have the market on the hourly chart making higher highs and higher lows. So really speaking, I want to look to see where that breaks. Now, if I was using trend lines for this, I always look at what's called anchor formation point. So I'll take a low point, drag it through to a formation point, and if it doesn't make sense, I'll get rid of it. Let me just move the moving average off for a second. If it doesn't make sense, get rid of it. Okay. Again, just grab trend line and I'll have a look at sort of this one to this one sort of thing. Got your anchor in there. Maybe even your formation could be a little bit lower because you've got that sort of chop that came into the market like that. And you've got that slight test here before price comes through. So as an early warning sign, once price kind of closes outside of that trend line, you could say to yourself, well, okay, well, this could be a good opportunity for price to turn from being in that daily phase 2 back into a phase 1. Okay, so you could look for a short opportunity there, stop loss above the swing highs, look to target back down at your recent swing lows. This is ultimately how I like to trade the market. Good example here as well. You can see a bit choppy on dollar yen here, but eventually the market does start making higher highs, higher lows. Now you could have looked at this break here. Okay, so you could have got short off of this candlestick here. But when I look at the return to risk to reward on that, if I put a stop loss above the high, targeting the swing low, it would have been a negative reward to risk ratio. So maybe not the best one. But again, you get another little bit of a break over here. Okay. Stop loss above the highs, targeting the previous swing lows. You got a 1.8 R there. And if you want to continue that on, then obviously you can. You can try and divert it lower. So that's how I use trend lines in my trading. I don't necessarily use them as these kind of big support and resistance levels. I look for how they can be used to take on a trend, right? Take on an opportunity to get long. If we go take a look at pound Oz and come down to the recent trends here, right? You've got that bullish phase, phase 1, phase 2, phase 1, phase 2, phase 1. If I go down a level, or even, so you don't even need to go to the hourly time frame, but you could look at the 4-hour time frame, for instance. So if you go down 1 for this example, you can see high, high, breakout, that's your long, right? Look at it down through here. Multiple highs, high to high. You can see all these connecting through, breakout candle, buy through there. So there's multiple different ways that you can do it. I like to use it in this context here where you've got that kind of phase 1, phase 2, and I'm always trying to look for where that phase 2 is going to end and the phase 1 is going to begin, and you can use trend lines to identify that. So I'm going to leave it there, guys, for today. Thank you for joining me. I hope you enjoyed it. We've covered what the strong and weak currencies are that we're watching at the moment. So pound, Aussie, looking for longs at this 191 handle. We've talked about dollar yen reaching all the way back to its previous area where we saw the stock market fall last week, and we saw that risk off play coming in. And we've also talked about how to trade trend lines. So hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you are new. Plenty of more of these coming up. Thank you, and I'll speak to you soon.